Tableside Talk. My name is Cam Kelly. I'm a commercial real estate broker with the Langert Commercial Group, and to my right is our principal and founder, Evan Langert.
Hi everybody. As Cam said, I am the principal and founder of the Langert Commercial Group. I'm also a 35 plus year practitioner of the commercial real estate industry. And Cam and I have decided to put together these tableside talks because over the years I've done a lot of deals. I've seen a lot of things, run into a lot of challenges, hurdles, things that needed to be overcome in order to move a deal forward instead of watching it fall on the floor. And so our purpose in doing these is to share with you some of the trials that I've gone through, some of the hurdles, how we've overcome them, ways to think about certain things that are helpful, with the hopes that they'll help you in your commercial real estate transactions. So with that as a backdrop, Cam, what are we talking about today?
So today, Evan, we are talking about preparing a building for sale. So as you know, when we get calls from potential sellers of buildings, they might ask if they should be leasing their space up before putting it on the market. They might have an empty building or a half-empty building, and they'll want to know whether or not they should lease the open space up with a tenant before putting it on the market. I was hoping you could speak to that question.
Yeah, that's a very good question and might be a little more complicated than some people would expect. There are certain asset types and certain properties where it's kind of clear as to what you should do. But the operative analysis up front to me is who's my most likely buyer. You have three main types, two that are primary, one that is not as common. But the first one is the investor. Investor is buying something for cash flow. They're not going to operate in any of the building. They're just looking to put their money down and get as high of a return as they possibly can, as safe of a return as they possibly can. And so they're going to want the property as least as possible. And that's one group. On the opposite end of the spectrum is the owner-user. The owner-user, they're not looking for cash flow. They might be looking for some if the building's bigger than they would use all by themselves. But they're looking and saying, well, this would be a great location for our business. This building has exactly what we need. It's set up exactly how we need it. It's got the right amount of power. It's got the right attributes to it. And so this is good for us. So the dilemma is, clearly if you find a shopping center that's 60% leased, your probable buyer is going to be a cash flow investor. So almost every case, I will look at a shopping center and say, well, we should lease this thing up before we sell it. I've got a situation right now where I've got a shopping center that's going to probably hit the market in Howard County, Maryland. And it looks like we're about to get a non-renewal from a tenant who's got about a third of the project. So we're not going to get the best price in all probability for the project unless we lease up that 1/3 of the space. So that's sort of an easy decision in that situation. Also thinking of another situation a few years back in Anne Arundel County, Maryland, where I had it was an industrial property, but it had a showroom and it was on a fairly high traffic street. So there was kind of a retail component to it. And the owner and I had that discussion. Who is our most probable buyer here? Is it an investor? Maybe. Is it an owner-user? Probably is it an owner-user. The preponderance of users or owners of properties around that area were owner-users. We thought the characteristics of the property were such that it would be an owner-user. So we don't want to go ahead and lease that property up because it was 15,000 square feet, and we got someone who came along who wanted 15,000 square feet as an owner-user, but we leased all of it to someone else, or even 5,000 square feet of it to someone else. They're not going to want the property. So that's your first analysis. You got to look at it and see who your most likely buyer is. There's also a third class of buyers, and those are developers. The developers look at things completely differently. They might look at it and say, oh, I see that warehouse that you have on there. That's a great location for a warehouse. However, it's also a great location for condos, or it's a great location for townhouses. And so I don't really want that warehouse. I just want the spot I'm going to knock that warehouse down and I'm going to build condos. So I'm looking at it and saying, how much is it going to cost me to build those condos and those townhouses? What purchase price am I going to get for those condos or those townhouses? Or what rental am I going to get for those apartments? And so I'm looking at all that and I'm saying, okay, given the math in all this, I can afford to pay X for the land that I'm going to put it on. And their analysis is that third category of analysis. So again, just to synopsize, some projects are easy. Cash flow, shopping centers are usually cash flow. Other cases, it's harder. And you've got to undergo an analysis and look at the area. Who are most of the owners there? What's the level of activity there? What's been the leasing absorption there? That sort of thing. And talk with the owner, because it should be their call after getting information from you as a broker, if you're a broker. And then we make a decision as to how we're going to best market the property. Hopefully this has been of help to you. Cam and I put this out, generally speaking, the information that we give you. Every situation is different. Every situation requires a little bit different of an analysis than other situations. So what we would ask you to do is to call us, email us. We make ourselves pretty easy to get a hold of. And let's talk about your situation in depth so that we can give you personalized advice. And with that in mind, we just wish you a great day, and we'll talk to you soon.
Thanks so much, folks.
Bye.